Traders, what is up? It's Dane, Market Scalper D, the old I got you pump and dump, right? You can see right here at the very top, man, they just pumped this thing up from Friday over the weekend. They maintained that level in the early hours of pre-market. I actually got shaken out right here. I took the 30% and I was cool with that. I was already pre-positioned with 2 contracts on the S&P 500 SPX. Here's what we're looking at. Right here, definitely was mad that I didn't hold, but I was not really feeling the price action right there. I was scared of a potential squeeze on all those big players that may have gotten trapped short. But you can see basically right here, this position, if you would have been looking at the gamma flip line, right? Let's look at the SPX gamma flip line. The 0 gamma level is approximately 7,465, right? But below that level, those dealers start to hedge. You can see right here below that line of 7,465 today on SPX. Market makers must hedge in the direction of the market, which amplifies moves and increases that volatility straight to hell, right? And you don't want to get caught on the wrong side, because you can see how much money you can lose. Right up here is where that flip line would have been. And if you're following gamma in the market or learning more about it, I definitely encourage you to learn more and find out all the different sites where you can pay attention to where the big players got to protect their capital, right? But look at how much money was made on the way down today. The position I had was a 7,400 expiring today. And then also I had another SPX position. I did 30% on that, expires tomorrow. I basically got rid of it. You can see right here, initial investment on the open on the way down, $158. Right here would have been really tough. A lot of people would have been shaken out right before that move happened. You can see right here it was $500, and then all the way up till it hit the bottom today, 1040. That position was selling for 2,440, right? So imagine the guys that are trading, those 20 contracts. They're making big money, man. They're making big money, and that's why there's always room to survive. If you run a tight stop loss, you want to be able to survive another day, right? Look at how much money was lost had you been on the opposite side of this trade and went straight to hell with your account. Let's look at how much money you can lose, how fast, when you're trading 0 DTE. You can see right here, oh man, we're at all-time highs. The market's going to go up, right? These guys would have basically been buying these contracts for almost $7,400, and then straight to hell your account goes all the way down to $1,595, right? That's only one contract, man. Imagine the guys who have enough capital to trade with like 20 or 30 contracts, man. They were not planning a vacation anytime soon. Tight stop loss, man. Have enough capital to just jump back in on another way down. Be okay with 10, 20, 30% profits. Man, there's always another day to trade. But I just love trading. That's why these videos are out there. Make some money, stay green. And then okay to be in and out of trades. Just have more money to jump back in on the way down if you're missing a move, on the way back up if you're missing that move. You guys take care, man. Don't get caught on the wrong side of the trade. And then real quick, right before you go, I will show you right here. We talked about the gamma flip line. Right here, if you stay to the end of the video, you can see right here, there's that 7,450 level. And that's when that gamma flip line would have broke, and all the dealers are basically hedging, and they're going to send this thing straight to hell to protect the original investment of these big players. They have to basically hedge their positions, and that's how you get paid in the market. You guys take care.